It is everywhere. Adam Hewison here, president and founder of iknow.com and co-founder of MarketClub with your midday update for Monday, the 19th of November. You know, it's a complicated, crazy world, and we say keep it simple. There's no doubt about it. Events in the world are crazy right now, and as complicated as ever as we head into this week's Thanksgiving holiday. Just look at the multitude of challenges investors are facing at this very moment. The Middle East, a potentially explosive situation developing between Israel and Gaza. The United States, the fiscal cliff. Europe, how can we overlook that disaster that just seems to be slowly unfolding and exposing the free world to even greater risk? And that's just three of the challenges we know about. I'm sure that in the new year we'll even have more challenges. So what is an investor to do? Well, here at MarketClub, our strategy has always been K.I.S., keep it short and simple. The K.I.S. principle states that most systems work best if they kept simple rather than made complex. Therefore, simplicity should be a key goal for traders, and unnecessary complexity should be avoided. So that's the answer. You know, the K.I.S. concept was developed by Kelly Johnson, who was the lead engineer for Lockheed Skunk Works. They developed the Blackbird spy planes. You know, if it's good enough for spy planes, then I say it's good enough for the market. So anyway, lots going on. Let's keep our eye on oil and gold this week. There are big movers today, as is the equity markets. So let's go right to the charts and see what they say. We're also going to be looking at a stock to buy and also looking at a commodity price other than gold and oil. So let's get started right away. So here we are. We're up about 1.6% now in the S&P 500. And you can see a big move up from Friday's close. And the equity markets are really doing well. Now, the one thing you've hit today is, let's scope this in to see the last 3 months. The one thing you've hit today is basically the PSAR. That has basically turned around. So it's showing you this is the first time that has happened since about this time period here back in October. So it definitely is the momentum on the downside. If you remember, we were talking about this last week. We were saying the market's very heavily oversold, which was absolutely true. And you can see right here, the market was oversold. And the action we saw on Friday was actually a little bit positive, and certainly today's action is positive. And there's the PSAR line just coming there. So it just hit there today. So the momentum, at least for the time being, has gone down. Now we are showing a minus 75 reading right here, which is still not exactly robust. We may get a rally back up to maybe the 1400 level, but I think there we're going to see what's going on with the fiscal cliff, what's going on in certainly the Middle East, and also what's going on in Europe. So that's the near-term outlook looks to be maybe a little bit higher, and that takes us back probably into a Fibonacci retracement level. So let's see how that plays out. Let's go on to our next market. Let's clear the screen. Go on to the Dow, which is also obviously all the equity markets are very strong today, up from their Friday closes, higher for the week, and the Dow is no different. Now that has not hit the PSAR, but it's coming from an oversold condition. And I would imagine we're going to see that a little more upside on that. The MACD is still negative, as are our trade triangles, which are all negative at this point in time. So that's a difference from the S&P 500. So let's move on to the NASDAQ. NASDAQ, pretty much the same thing, strong up move today. And you can see right here that the only one that's positive is our daily, which is not so surprising. It's the shortest one. But you're way below the PSAR. And you're actually coming from an oversold condition. Now, remember last week we talked about buying the index, the S&P index, and shorting the other markets. I still think that's probably a good strategy. The S&P index is by far and away the strongest of all three indexes we follow. So moving on to the Eurodollar. The Eurodollar is actually doing very, very well. Got back up to the 128 level. Remember, this is a very heavy resistance level. I think from 128 to 128.50 will be very heavy resistance. And we're not quite in an overbought condition yet, but we're not in an oversold condition either. So I expect this market to run out of gas right around the 128 level and start moving back down again. So we'll see how that plays out. Now looking at crude oil. Crude oil is a big mover today. Certainly the high we've seen today at 89.62 is just below the highs you want to see. So if it makes new highs today, 89.70, definitely want to be a buyer of crude oil. That's going to turn our weekly trade triangle positive, and we trade crude oil based on the weekly and the daily. So the daily's already kicked in. You can see where that kicked in right here 4 or 5 days ago, and that kicked in at 87.02. And we're currently trading at 89.42. So again, we want to see the weekly kick in, and that could kick in as early as today. Certainly, we've talked about this being a base level for this market. So here's the base. Here's the energy field we talk about, and this is really the line in the sand. If we go over this high that we saw, and we could quite easily do that today. And let's see how that plays out for the rest of the day. But certainly the PSAR is now positive, and we're just beginning to turn up potentially in the weekly. We'll have to watch and see how that plays out later today, but things are looking pretty positive there because obviously what's going on in the Middle East, and I hate to say that, but that's the reality of the situation. So you've got the MACD is positive, so it looks as though the market's trying to build that turn up. And of course, if things really escalate and Iran is brought into this and other things, it could just get really ugly, and that's going to say what price is oil going to be. Pick a number. It could be anything. So again, right now, still plus 55, minus 55 at trading range, but we're at the upper end of the trading range. If we close over these levels, again, the level we are watching very carefully today is 89.67. And we've traded 89.62 today, so we're just below that level. But again, if we get we need to get that weekly kicked in there, and if that kicks in, then we're off to the races. So let's go to our next market, but really pay close attention to that. Spot gold is another market that's had a big move today. We've got a daily kicked in, of course. We've got only the weekly is there. And the weekly kicks in at 138, I believe. We talked about this all last week. We talked about this market, about really paying close attention to the gold market. And of course, you've got the same very strong sort of base here that we're building up. And if we see the market over these levels, we may see a pullback, but generally speaking, that's going to spark all of our trade triangles to be 100% positive. So that's what we're waiting for. That's the key. Key level we're looking for is the 1738. I don't have 138, but 1738 is the key level to look for. That's if we go over there, $1,738 an ounce. That will be very, very positive for the gold market. So really pay attention because you've got a lot of action, a lot of work underneath this, really starting in October 21st. So you can see October, November, you've got almost a month's worth of action here, and it seems to be enough to overpower this level here. So again, that was a top we saw, and now this I think is a base to push this market higher. So let's clear that screen and go to our next market. So we've got finally into markets that are really interesting. Copper's put a very big performance in today. 3.55 is resistance level, but you've got over the PSAR. The longer term, remember we talked about long term last week, is very, very positive, and even though our short term were negative, it's really made that turnaround, and it looks as though it wants to go high. But again, to kick this into high gear over 356, let's say 357, I would say we'll turn the whole thing around. So let's see how that plays out. Next market, we talked about this last week, silver, very strong today. We're up almost 1.7% in silver. We got positive this market, if you remember, about 6 days ago, actually on the 13th of November, when our weekly kicked in. Everything's positive here. It looks as though you've built that big base, what I think similar to what we're doing in gold right now. So here's the base right here, and it looks as though we want to just move over this line, and that's going to be enough certainly to test this level. And I think potentially if we scope this out even further, let's clean the screen and scope this out just a little bit further, let's say a year to date, we could test obviously the 35 level, but we could also test the 37 level. And of course, if we take this all the way out, let's say the last few years, we could see this test up towards the 45 level. It really is going to depend on what happens to the fit. I mean, there's so many variables here, but again, keep it simple. Listen to the market. The market's telling you it wants to go higher. What the reason is, You can point to a half a dozen things, but it doesn't matter. The market's going higher. So let's just go back to the 6-month chart, and let's go back to get back to where we want to be for our next market. So here we are. We're looking at TripAdvisor. This is a buy signal that kicked in today at 39 even. It's 38.73. You have a chance to buy it at a lower price, but it looks to me as though TripAdvisor certainly has put in a big base. If you just have to look at this market going all the way back to the August period, and it looks as though it wants to go higher. So certainly the signal is there right here. Your plus 100 indicating the market should be going higher. So TripAdvisor could certainly trade up to the 40 level, 46 level rather. So I think it could join these highs that we had up here. And let's see how that plays out. One thing to do with the markets, which you may want to do, is simplify them. Again, I've got several indicators on here, but the reality is that you only need probably a 1. So if we take this down and we go the on-chart study, let's take off the Donchian and the parabolic, and let's take all our triangles off. We don't need those right now. And let's go to a very simple line chart, and you can see clearly on the line chart this market has made that turn. And if we scope this out even further, let's go to, let's say, 1 year and possibly 2 year. That's good. 1 year is good. So we could potentially see this market going back up to the 44 to 46 level. I know my wife uses this site extensively for our trips. So it's very, very good in terms of getting information on trips. So let's see how that plays out. But you can see the MACD. We're a little bit overbought, which you may get a chance to buy this if it pulls back to maybe 36. But nonetheless, the trend is your friend, and the trend, according to our trade triangles, very positive. You can see these monthlies don't kick in that often. There's one back there. That's in March of last year, March of this year rather. And you can see we had a signal here, and then finally another signal here. So it looks as though we're going to start back up. Now, one market we're going to look at today, which we don't normally look at, but I think it's kind of interesting, and that's the corn market. That's the March corn. And what's interesting to me on this is the fact that the monthlies always stayed positive. Only the weekly is negative right now. But here's the pattern I see that I'm looking at. Let's scope this in just a little bit closer. So you can see we had the big move up. That was the corn blight. Remember the corn, not the corn blight, but that was the drought that we had. And really, unlike everything else, you haven't come back that far. And just to put our Fibonacci tools in there, you just draw from the very high down to here. And you can see we had a 38.2% retracement, a double bottom right here. And that's important, is a double bottom. You can see it clearly here and here. Now we need to get over this level right here. If we close over this level, I think you've really got something going on the upside. That's because you could draw a trend line, certainly. Let's just clear this up for a second, get back to my other tool. But you can draw a trend line from the highs here. And you can see you got all the points joining right there, 1, 2, 3 points. Very close to breaking out on the upside. Certainly the daily momentum is positive and the monthly momentum is positive. If you get the weekly, which should kick in, I would say, if we see this market, let me just put a very simple chart on here. Let's see, I would say probably over the 775 level, which is a little bit higher, about 30 cents higher than we are right now. Possibly even the 761 level, maybe about another 20 cents higher, this market could really start to sing on the upside. So again, unlike soybeans and unlike wheat, this market looks a little more positive to me. It's something to watch because corn goes into practically everything. Corn fructose, which goes as a sugar substitute, it goes into a lot of soft drinks, so it's the demand's still there, and it doesn't look like it's abated even at these levels, which are substantially higher than they were even 6 months ago. So watch corn very carefully. I think it'll be an interesting market. Watch oil, of course, and of course watch gold. We should see some interesting markets. I'll be back tomorrow, same time, same place. I'm Adam Hewison for Market Club. Thank you so much for taking the time to watch this short video on the market, and every success in your trading today.